Hello everyone, and welcome to Safari Venturists. Today we have two startup founders, very optimistic about their chances against our rangers or judges. But before we get into the meat of this episode, we have to know exactly what is venture capital and what even constitutes a startup. Venture capital funds fledgling businesses in exchange for shares. Though it may be risky for investors, the potential of higher than average gains is alluring. Venture capital is becoming a popular, even critical, source of financing for projects with short operational history of less than 2 years, particularly if they lack access to capital markets, bank loans, and other debt instruments. Now, a lot of people get confused with all this talk of funding and mislabel the duties of different type of investing firms. So let's take a moment to break down where exactly our rangers fall into the financial market. 1. Private equity is not venture capital. 2. Investment banking is not venture capital. Bam, there we have it. So now that we understand the exact market niche that venture capital targets, let's define those startups. So startups are businesses or initiatives that are focused on bringing a single unique product or service to the market. These businesses often lack a completely formed strategy. Typically, you are no longer a startup when your sales reach over 50 million or your company is valued at 500 million or higher. Since startups have zero or negative profit, venture capital firms can seldom rely on traditional financial ratios to assess success. Instead, venture capitalists look for a competent and experienced management team, as well as an exceptional product or service that solves a genuine, unaddressed problem in the marketplace. All in all, they seek a commercial edge. I think the real question now is, do our two contestants have that commercial edge? Let's find out.
Hello Rangers, I hope you're doing well. Today, I'd like to share with you the vision of my startup, Blue to You, which offers patented Bluetooth low-energy software and hardware that allows for a contactless in-store payment method. This product amalgamates customer relationship management and marketing tools with payment collection services. To explain how the product works, I'm going to use Starbucks as an arbitrary example. First, small beacons are installed throughout the physical Starbucks store, and these beacons are connected to the Starbucks app via an IaaS or infrastructure as a service, which is a system that combines all functions into a uniform company dashboard. When a consumer with a Starbucks app walks into the store, the beacon senses it and is able to send targeted promotional messages and rewards to that customer. At checkout, the cash register can wirelessly authenticate and complete the payment without the company even pulling out their phone. Forget tapping with Apple Pay or scanning an app. This is the future of convenience, hands-free payment. These are an example of sample promotions that would be sent to the customers when they walk into the stores. Cost-wise, beacons cost $100 each to produce, and we foresee selling them for $300 each. How many needed per store varies on the size. We would also offer technician services for installation and employee training for $50 an hour. We can even offer consulting services where a member of our team stays on with the company for a certain amount of time at an hourly rate of $100 per hour to ensure the technology runs smoothly initially. We have seen demonstrated interest from Shake Shack, Chipotle, and Panera Bread, but we have not been able to secure any partnerships as of yet because we did not have sufficient funding to mass produce the beacons. The software component is completely developed and easily customizable and transferable, but without funding to build the beacons, we cannot gain clients. We hope you will consider joining us to revolutionize the market of consumer payment convenience. Thank you so much for listening.
Hello Rangers, I hope you are doing well. Today, I have created a presentation about my company, Teaser. Teaser is an app compatible with Apple and Android devices that provides daily brain teasers for the users that pay our subscription fee. These teasers are designed to help you do better on standardized tests. We conducted studies prior to app launch, which have proved that 8 in 10 participants raised their ACT and SAT scores by 4 to 5 and 200 to 300 points respectively, only by using this app for a 4-month time period before taking their tests. Currently, our app has been on the App Store for 1 year. Our subscription costs $30 a year, and we have 750 subscribers to date, totaling $22,500 in revenue. Unfortunately, we are still paying off debt from the scientific trials we conducted. Our current costs from research and development total $100,000, but future incurred costs will be low, as the app really only needs maintenance going forward. We also have a marketing strategy prepared, although we need funding to execute it and attract customers. With your help, we can invest in the marketing push we need to gain more subscribers and make a profit with Teaser. This is a stimulating and innovative learning app, and I hope you are just as excited as I am to keep going with this company. Thank you for your time.
All right, thank you so much for those presentations.
We're just going to take some time now to discuss.
Look, we know that only a very small percentage of our funding actually ends up going to startups because investing is really about hedging risk. Right now, I really want to focus on the infrastructure and see whose idea really is solidified with a large potential market.
Yeah, and I think we should start by conducting a valuation of each company. We can't use the EBITDA method of net profit plus interest plus taxes plus depreciation and amortization because the companies are at zero net profit. We have to estimate them more qualitatively. What I like about Estefania is that she's already at Series A. She has a marketing strategy, a pricing plan, and transactions with initial customers. All things you'd find in a business model canvas. What worries me is how niche her market is. I don't know if she can sustain business long term, especially because students might sign up for a subscription only while studying for the test and then cancel it later. Melanie, on the other hand, is in the early seed stage. She knows exactly where she fits in the larger market, and she has intriguing patented technology to back it. But she has no partnerships yet, and therefore no proof of how she'll compete with similar technologies in the market, such as Square Wallet, Apple Pay, or apps that use near-field communication.
Yeah, but I don't think having buyers is a deal breaker when it comes to assessing risk. Our connections and funding as a venture capital firm can give her the extra push she needs. I'm more concerned with management and market size, and I just feel that Melanie's team is more equipped managerially with in-house software developers, and market-wise, her product, it applies in so many more contexts, from grocery stores and restaurants to retail stores and shopping malls, both domestically and eventually internationally. The scope is so much broader because the technology is so applicable for both marketing and sales.
You have a really great point. I mean, look at Square, which is in the same industry. When they raised their first round of Series A funding, they got $10 million from venture capital at a valuation of $30 million, and they used that $10 million to develop their first product. Melanie is in the same boat. She needs the money to mass produce her first product, and she's got working prototypes and proprietary software already. I'd use Square as a precedent to value her.
So what we need to do to value Blue to You is speak with our analysts who will use the discounted cash flow method. However, after quick calculations that value Teaser, we've determined that as a very low valuation. The market earnings multiplier is extremely low due to the fact that the company has been unable to get much revenue at all and is in a lot of debt in comparison to those sales, meaning it's not a smart decision for us to invest in Teaser, I don't think.
Great, so I think we're in agreement. We're going to invest in Melanie's company, Blue to You. We'll have to set up some meetings with her to discuss the term sheet, which you and I will draft off camera.
Definitely. We'll need to be sure to include our liquidation preferences or preferred stock, veto rights as investors, anti-dilution protection, stock options, issues, redemption rights, information rights, insurance obligations, and our commitment to due diligence. We should also specify the form of financing we'd like. I'm thinking the convertible preferred stock investment because we can attract partnerships by offering them stock options to buy the common stock from us when it converts from preferred.
Sounds like a good plan to me. Let's tell the contestants the news. After very careful consideration of the potential growth and valuation of your startups, including your management team, marketing strategy, and potential marketing share, Ranger Julia and I have decided to fund
Melanie startup Blue to You.
Thank you so much. I'm so excited.
1 year later, and we can see how venture capital really can play a vital role in the development of startups. Blue to You obtained the capital it needed to produce its beacons and other hardware technology. With the ability to promise performance and products to their prospective partners, Blue to You was able to install their technology in Shake Shack, Panera Breads throughout the country, and is currently having discussions with Starbucks and Walmart due to their immense success. Additionally, Hannah and Julie were able to work on the team and share business and HR management expertise. They also incentivized companies to invest in stock options of the preferred stock, resulting in over $40 million additional dollars raised. And since Hannah and Julia share in the ownership, there is no obligation to repay them, unlike a bank loan. Although Blue to You had to give up some control, the competitive advantage gained was ultimately worth it. Thanks for watching. See you next time on Safari Venturists.